New home sales in the U.S. are up 12.3% month over month. That's 759,000 new homes sold compared to a forecasted 675,000 homes. There are still less homes on the market now than there were last year, though housing inventory is still increasing every week. This week actually marks last year's seasonal inventory peak, though with the latest rate hikes, I think it's likely that this year inventory will continue to climb later in the year than last year. There is still no housing crash in sight, and many home builders are offering a 6% mortgage rate, keeping housing affordable for buyers who are willing to move out to the suburbs. Francis Ngannou won the fight regardless of what anyone says and is now the face of boxing. But we've got a lot to cover today, so let's get started. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, you'll see the top 10 rank chart, the hottest and coolest both cities and zip codes in all of Dallas and all of Collin counties. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to move to the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is October 30th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get you to the latest weekly market update. Okay, first up is market news. It was released last week that GDP is up 4.9% for the last quarter. Where is this recession I've been hearing about all year? The Fed keeps hiking rates, yet the economy is speeding up. If I had told you a year ago that mortgage rates would be at 8% by the end of this year, you would have said housing prices will crash, inventory will be through the roof, the bubble will pop, and it'll be full-blown chaos. Add to it the Airbnb bust that was supposed to happen, the shadow inventory, the secret foreclosures that would happen once mortgage forbearance was over, which, by the way, foreclosures are still near all-time lows, and at the point when they do begin to happen, it will take 9 to 18 months for that inventory to actually hit the market. These are all the talking points that people have been telling me for the last year about why they're waiting to buy a house, yet what actually has happened? Prices this year went to all-time highs, inventory is still negative year over year, and the number of homes having price cuts is 4% lower than it was last year. At what point will you concede that it's possible all the doom and gloom you've been hearing in the media was just made up to get more clicks? Inflation has been dropping and dropping, and in fact, almost all of the inflation that exists currently is from the housing market. And the only reason the Fed hasn't pivoted yet is because unemployment is too low. There are still too many people employed spending too much money. So the inflation component is dropping right on track, but the Fed hasn't been able to break the labor market with these high rates. And this coming week, we're going to have 4 labor reports and 1 Fed meeting. This Fed meeting is going to be an exciting one because it's the first time in all of this that real yields are happening, meaning the 10-year yield is actually outpacing inflation. The way I see it, we have 2 options. One, the Fed acknowledges that having real yields and the way that inflation is cooling means that it's time to pause rate hikes, which for me would mean rates are going to remain high, they're just not going to climb anymore. I don't think we're going to see any significant drop in rates for a while. Or 2, they'll say jobless claims are too low and economic growth is still too strong, and we need to continue raising rates until the labor market breaks. I am of the belief that we're going to see option 1. High rates are having the desired effect. Now we keep them up here and wait for things to break in a slow and orderly way, otherwise known as a soft landing, which means the housing market will continue to soften, but rates will remain high. So inventory will start to climb, but it could still be years before getting back to normal inventory levels. Now, the other side of this is, at the point when the labor market does start breaking and jobless claims and unemployment rise, if the Fed cuts rates at any point, the housing market is done for again. It's going to be multiple offers on everything, prices going through the roof, and inventory dropping. In other words, the clock has started. You have between now and whenever the Fed drops rates to buy a house at a decent price. So please do not wait thinking that you can time the market and buy the bottom. You have between now and whenever the Fed decides to drop rates, which no one knows. Also, if you're looking to get the best deal in new construction, I made a great video last week covering that, and the discounts are huge in some communities, up to 24% off. So make sure and check this one out next. Okay, moving on, starting with national housing inventory. We saw another increase in active listings from the previous week with an increase of 8,206 homes in the country. However, we are still 14,571 homes short of where inventory was this week last year. So still less homes on the market today than there were last year. You can see that reflected here. This is lower than this. And this absolute peak, that was the top of inventory last year, and then we headed straight down from there. So This week is the corresponding week to that peak. So if it ends up the same this year, it would start dropping from here every week for the rest of the year. Now, I think that's unlikely given the recent rate increases, but we'll see next week. Now let's look at new listings. As you can see, after trending well below the previous 2 years in weekly new listings for most of the year, we have caught completely back up, which is great. And we are dead on where the new listings this week were in 2022. And this is great news because it was very possible with rates climbing this high that we were going to see less and less new listings as home sellers stay put. Because remember, most people who sell their home, they're not looking to become a renter. They're looking to buy another home. So all these people in the new listings category are committing to buying rates around 8%, unless of course they're going to new construction. But just want you to know this could have easily gone the other way, where people who were looking to sell their home would have said, forget it, 8% is too high, now we're just going to stay put. So this is good news for home buyers. But all you need to know about this is that from here until the end of the year, you'll have less and less new options to choose from every single week, until the spring market begins basically, which means fewer great homes will come on the market every week, which means you need to be ready to go when they do. You need to be pre-approved, working with an agent, ready to go before that home hits the market, or you're probably going to miss it. Don't be fooled into thinking that just because overall inventory is increasing that you're going to have good options for the rest of the year, because as you can see on this chart, you're going to have less options every week. So inventory going up just means the houses that you already don't want that are on the market are going to remain there. Meanwhile, you'll have less new options to choose from every week. Now, if you're an investor looking for a rent grade home, then you're going to have plenty of options for here through the end of the year. Now let's move on. This is the percentage of homes having price decreases, and I just want to point out this dot is obviously way below where it was a year ago. This week last year it was about 43%, and now it's 38.9%. So still quite a few less homes having price drops every week compared to last year, even with rates way up here. And we'll look at these numbers for the local markets here in a minute. So this would hardly suggest a market crash for those of you who are market crash believers. Okay, moving on to mortgage rates. We started the week at a 7.91. For a moment there, got all the way back up to 7.98, and we ended up at a 7.88, though let's take a look at today. This is the 10-year for today. As you can see, it's pretty neutral. It climbed up a little bit from last week, but we'll just have to see where it closed. Remember, it closed where this black candle is, so as long as this ends up the day down here, where it's already tried to reach today, then you should expect that rates will not go up today. But one thing that's clear is that it has not been able to reach back up here at the peak of rates. It's tried a few times and it keeps getting rejected. I would expect the next move is going to continue down. But of course, remember, we have 4 labor reports and 1 Fed meeting this week, so you can probably expect more volatility this week. And regarding mortgage purchase applications, we actually saw another 2% decrease this week. Part of that is seasonality. From here to the end of the year, there should be less demand, but then the other part, of course, is rates being so high. This makes for 18 positive, 22 negative, and 1 neutral print regarding mortgage purchase applications this year. And if you think that just because rates are up near 8%, you can no longer afford a house, I promise you still can. There are still ways that anyone can get their monthly payment into an affordable range, and I made a detailed video showing you exactly how to do that here, so make sure and check that next. Now let's take a quick look at the MLS data. Starting with Dallas County, we had 257 closed sales in the last week. That's 5 more than the previous week. 237 homes went under contract. That's 8 less than last week. 407 homes listed this week. That's 75 less than last week. 61 of the homes that closed were immediate sales, meaning they contracted within the first week. And in total, there are 2,021 homes either under contract or in pending status. That's 52 less than last week. Now moving on to Collin County, 207 homes closed. That's 37 less than last week. 149 went under contract, 40 more than last week. 284 new listings, 35 less than last week. 51 immediate sales, 11 less than last week. And in total, 1,488 homes are either under contract or in pending status. That's 148 less than last week. So in general, we had more executed contracts and less new listings, as can be expected this time of year. Okay, let's move on to housing data. If you've seen my videos, you know that what I look at is called the Market Action Index. It takes all of this real-time data and puts it into one easy-to-read graphic. You can see here we're at a slight seller's advantage. The number is a 43. Anything below a 30 is a buyer's market. Anything above, and we're asking how much of a seller's market are we in? Something to note this week is the median list price actually, for the first time in a long time, had a $1,000 jump up. So not a drop. As you can see, it's been dropping for a while. The median days on market remains at 42. The number of homes having price decreases we'll check out here in a second, but it is actually down from last week, barely, 45.82 to 45.57. Inventory as well, you can see we've had a very steady increase up. It looks to be a little more flat than it's been in a while. And of course, as far as the market action index number itself, basically we peaked somewhere in July, which obviously is usually our seasonal peak for the hottest market. So what you see is just partially seasonality, but also that rates have been going straight up since then. So it's both. But it's totally normal that the market action index is lower now and has been decreasing ever since the summer. So let's look at the number of homes having price decreases. What we want to look at is 45.57. 1 year ago, we were at 46.2. So there are less homes having price decreases now than there were last year. And also a slight tick down from last week. Now moving on to Collin County, same thing. Their market action index is a 44, which is also a slight seller's advantage. Actually, last week they were still in a strong seller's advantage, which is above a 45. So this is the first time they've moved down to slight. Their median list price had a drop as well from last week. So we were at $599, $595, and now $590. The median price of new listings had a little drop as well, and I am speculating here. This is not based on data. This is just my opinion. But I think the trend will be the median price of new listings continuing down just because there's so much new construction over there. And I think the new construction is trending towards the more affordable side, whereas a lot of homes used to be $700,000, $800,000, $1 million, which there still are a lot of those, but I think we're seeing a lot more of the 4, 5, and 600s. So I think as the lower price point, as more of those are being built, I think we're going to see this number come down a little bit. Again, that's totally just my guess from looking at Collin County with no data at all. Their median days on market continues at 42. Number of homes having price decreases, 47.63, which is a drop from last week's 48.15. So Collin County as well seeing less homes having price reductions this week. Their inventory is starting to climb, but it's almost like too little too late because all year they've been flat. They haven't really been having a climb, though anytime we see inventory going up, just know that's good for you buyers, but we certainly wish it would have been going up the rest of the year as well. So looking at their number of properties having a price decrease, 47.63, whereas a year ago we were all the way up to 53.14. So there are way less homes having price drops now than there were a year ago. I keep having people calling me, telling me we're seeing a ton of price drops, the market must be crashing. The price drops that you're seeing are less than you saw last year. You're just not used to it because the rest of the year you've not been seeing it. But seasonally, this is totally normal. Okay, now we're moving on to our top 10 ranked charts. These are the hottest and coolest both cities and zip codes in all of Dallas and Collin counties. This is done using that same market action index number we just discussed. Starting with the cities, the absolute hottest city is Carrollton, Texas. It's a 62.55. Remember, a 30 or below is a buyer's market, so this is a very hot market. Followed by Coppell, which remains in its spot. Louisville heats up one. Irving cools off one. Richardson heats up one. Garland cools off one. Balch Springs heats up one. Prosper, Texas, which is in Collin County, jumps onto the list maybe for the first time, actually. And you can see it's been doing a slow grind upwards, whereas some of these other cities still have a high number, but they're doing a slow grind downwards. So interesting to see, especially because Prosper is a much higher price point than a lot of these markets. If you're looking for new construction in Prosper, realistically, you're starting pretty much at about 600. Most of the homes are quite a bit higher than that. And if you're interested in Prosper, make sure to check out this video next. I cover all the new construction, where all the discounts are, what you can expect to pay, everything. So if you're interested in Prosper, make sure to check that out. Grand Prairie remains number 9 this week, and Plano actually cools off 3 spots. So Prosper jumps on at number 8, Plano cools off 3 spots, and Mesquite falls entirely off the list. It was number 10 last week. Now we're zooming into specific zip codes. The absolute hottest is Carrollton 75010, followed by Irving 75063. But I want to point out the difference. Carrollton is a little bit more steady, whereas Irving looks to be going straight up. And then number 3 is Garland 75041, and you can see that one definitely looks like it's cooling off. Then Carrollton 75006 and Carrollton 75007, both of which have been trending in the cooler direction. Same with Louisville 75067, Irving 75060, Dallas 75249, then Louisville 75077, and Richardson 75080. So those are the 10 absolute hottest zip codes in all of Dallas and Collin County. Now we're going to move on and do the same thing for the coolest markets. Leonard, Texas remains the absolute coolest city, and it's still the only buyer's market. Remember, below a 30 is a buyer's market. It's followed by Whitewright, which cools off 1. Ferris cools off 3. Salina and Van Alstyne remain. Sunnyvale heats up 4 spots. Seagoville jumps onto the list out of nowhere. Farmersville cools off 2, Rockwall heats up 1, and Royce City heats up 1. So Seagoville jumps on this week at the number 7 coolest city, and Blue Ridge leaves the list, probably because of inventory. These ratings only cover markets with 10 or more homes listed. Blue Ridge is a small market, so it's likely they just went down to 9 listings, and that's why it dropped off. Now zooming into the coolest zip codes, we have Leonard 75452, Whitewright 75491, Ferris 75125, Salina 75009, Van Alstyne 75495, Dallas 75219, Sunnyvale 75182, Dallas 75212, Plano 75094, and Grand Prairie 75054. Well, that's it for this week. As always, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. Thank you for watching, and I'll see you in the next video.